Aloha and good morning, everyone. It's Tuesday night on Maui. It's going to be Wednesday morning when everybody watches the video. We'll go ahead and get it started off with the NASDAQ. The NASDAQ had a decent session overall. It did close down 0.20%. Volume was heavier than the day before, giving it a quote technical distribution day. However, the rally off the lows was quite nice, and overall, I mean, when we have the NASDAQ still trending technically above the 5, 10, and 20-day moving average, very hard to really, get too bearish following the last 2 days' action, especially considering that volume is below average. Still, though, something to keep an eye on as we move over to the Russell 2000 because the past two sessions have been pretty negative for the Russell 2000, down 1.67 the past two sessions. This index did not bounce back as much, closing down 0.47%. And as we've seen throughout this uptrend, I quickly want to show you something. If I draw this trend line connecting from here all the way from here, you can quickly see that it becomes a good idea to maybe start hedging your Russell 2000 position when it gets up to this trend line. So as you can see, around a short anywhere around this trend line, you never would have lost that much, and eventually it works out. And once again, here we are finding resistance to that line. So as long as that line keeps up, I'm not going to be shorting the Russell 2000 on a break. Yesterday, I really didn't think that one day constituted a break with a low volume. Today's a follow-through. So we are going to start a 2% position in SRTY. As you can see, it's got a large volume the past two sessions, and now BOP's turning green again. The final cut loss, if we don't do anything right, is going to be a close below the low day of today or the low day of the 29th, which is 11:33 if it doesn't work out. But because of its inherent weakness, I do want to go short the Russell 2000 just as a slight hedge because we are extremely long, and we have new longs tonight. But before we get to those, I want to get to the sells. But really quick, let's look at the S&P 500. You can see the S&P 500 down 0.32%. Volume was above average. A little bit more concerning, but once again, it wasn't a horrible day. We got some intraday support, so we'll have to just keep an eye on that. We are oversold on the McClellan. Not good. CALD closed below the 20-day moving average for the first time of this stock's life since going long, and since closing below the 20-day moving average before giving us any gains. Another 50% has to go off there. Remember, this was the signal date, but the lower day of this day, 1060, is really my final cut loss. I really thought CALD would be doing something by now, and if it doesn't move up tomorrow, CALD is going to probably shake us out. Who knows, though? With this beautiful chart, though, it could allow us to get right back in, so keep your eyes open. We have to also remember, since that breakout, like I said, I thought this one was going to run, definitely based on its earnings and sales. It's kind of disappointing, but still in a position to work its way higher. WSTL is another little stock that I thought would be running by now. It's still holding in, but we'll have to keep an eye on that. But CALD, because it's closed below the 20-day moving average, is not going anywhere. That is a 50% sell. SSTK is a 25% sell, closing below the 50-day moving average on above average volume, so we can go ahead and get rid of some of that there. ARC is closing below the 20-day moving average on heavier volume. It's barely closing below the average, but it is ever so slightly. So therefore, it's by 1 penny below the 20-day moving average, so it is a 25% sell. TEO, another heavy volume failure. This is the second one in a week. Therefore, this sell is 50%, not 25%, also because it's about ready to wipe out most of the gains, so we're going to take more profits. In RM, despite the lower volume break, the fact that it broke this hard gives it a pretty weak relative strength line, rolling over, trying to erase the, whoops, Windows 8, you are wonderful, trying to erase the gains, and therefore the problem with this one is that since it wants to erase its gains so fast, it's also going to be a 50% sell. And POWR, we've had this since December. Looking for a long-term capital gains. Looks like we're just going to miss out, as that's a huge sell signal today. We got to sell 50% of it. 141% gain still, but still, when you look at this heavy volume attempted breakout and reversal, followed by that heavy volume sell-off, most noticeably on an arithmetic 2-day chart, that's pretty ugly. And since we're now following with that break, POWR probably is only, it's another heavier volume, close below the 50-day moving average, and a close below 200-day moving average away from being a full sell. And then CHTR is a fail. I know that I said your ultimate cut loss could be at the close below the 126.80 level. However, that close there, 129.31, is below the 130.50 open, and that's my personal final cut loss, especially on heavier volume. This damn stock shouldn't have rolled over, so it's done. The two new longs, Herbalife. My problem with Herbalife is it's a bit extended. Oh, thanks, Windows 8. Looks like I have to disable that application as it's wanting to mess with me. I'm going to go ahead and put in a limit order right around here, um, around the 74.95, 74.90, 75 area. I wanted to get it a little bit deeper, more like right around the high day of this day of 73.18. However, my experience yesterday with GoGo, or today for me, was bad. I had limit orders in GoGo at 30 and 28. Definitely thought it could pull back at least to 30 to get me partial filled. I didn't think that it wouldn't even be able to hit the 31 open, and the lowest it traded was 31.40. So even if I would have done a limit order at 31.31 the close, which is the worst case I would have done, I wouldn't have gotten filled. There's no way after being up 17% in one day, I would have thought this thing would be up almost another near 10%, especially as extended as it is. I mean, that just is looking kind of ridiculous if you ask me. It's bound to pull back. However, with it being up so much in one day, a pullback to 28 anytime soon won't give it a nice look. So I'll have to see it consolidate out and then become a possible new long. Tesla also moving off the lows, keeping an eye on this one. I really want to get long Tesla. In fact, a move above the 50-day moving average will be a long signal for me on Tesla, and then I'll have some buy stops at the late October highs and middle October highs, because I'd like to get a position, especially if we have room to run. ABBV is the other new long, big mutual fund growth since it listed on the NASDAQ. Very excellent, buyable gap up actually with the volume surge in the morning, and it followed through. Another pocket pivot point signal, BOP surge, relative strength surge, money stream surge, everything surge. The breakout, it basically looks like to me it's like a base on base pattern. This is the first, don't do it to me again, there's the first base. Basically a big long cut base, and then an ascending base, so it's an ascending base on top of a cut base. Nice breakout. But that's it. Have a great Wednesday, everyone. Aloha.